one stock that has been outperforming a fair bit and has been hogging a significant amount of limelight within the broader end of the market is IndiaMart. And why it was in the limelight today was because Motilal Oswal has initiated its coverage on this particular company. To start with, let me tell you a bit about the company. It's essentially India's largest B2B online classifieds player. They have more than 70% market share. In fact, they have more than 6 million supplier listings for 68 million products across 100,000 categories in 1,000 plus cities across the country. What is it that makes Motilal bet on them or be optimistic about the prospects of the company going forward? Firstly, they flagged off it's the strong network effect, resilience to supplier ROI, diversified exposure, and robust SEO, search engine optimization, which are the key strengths according to Motilal analysts, and they believe that these are going to be the key differentiating factors for the company and its prospects going forward, even for the stock price. They're saying that IndiaMart operates in a sweet spot wherein high growth SMEs fuel the top line and a subscription-based model limits the risk of default. Margins, they say, mirror the positive operating leverage from revenue growth in the business. In fact, in the last 3 years, the scalability of paid suppliers and RFQ relevancy have led to a 26% revenue CAGR. That is something that Motilal analysts are also lauding and also drawing our attention to. And as far as the risk factors, they include higher mortality in supplier base, potential entry of a cash-rich global player, because at this juncture, competition is not very stiff for a player like IndiaMart, especially the listed space. I think it's the only one that really stands out. Undoubted leader in B2B classified space. That's what Motilal analysts are calling it. It's a dominant market leader, like I said, in the classifieds B2B industry. The company banks on increased digitized adoption in SMEs. They have positive operating leverage, which is a rarity, at least at this juncture. Even the Q1 numbers were very, very resilient despite COVID-led disruptions. So that's something that they're banking on as well. They have a strong network effect, which has created circular value addition for the company. So it has essentially strong moats, which has shielded the company from a host of disruptions. The company's reliance on specific search requirements, large portfolio of product, they essentially isolate the platform from threats from large horizontals like Google, for instance. It operates on negative working capital cycle led by upfront collection from sellers on the platform. It has high free cash flow yield. It has a strong balance sheet. Again, some key thumbs up points and key tailwinds that Motilal analysts are betting on. It's also the first to recover, and hence they're initiating with the buy call. They're forecasting a 9% CAGR in paid suppliers, coupled with 2% CAGR in ARPUs over FY20 to FY23, implying a revenue CAGR of 10% over the next 3 years, which is FY20 to FY23 period, essentially. They forecast an 8 percentage point margin expansion over FY20 to FY23 on account of better management of costs and operating leverage in the business. So yes, Motilal has initiated coverage, giving it a thumbs up on most counts, and they haven't really flagged off very major concerns at this juncture. They continue to be very upbeat. The target that they've given is also very ambitious, 3,550. The stock, of course, has seen a very, very solid uptick. It got listed a little over a year back, stellar listing seen. From there on, it gained about 135% so far. If we look at the kind of returns it has given to its investors and shareholders, and this year so far, in fact, the returns have been close to 50%. So good going for IndiaMart. Let's see whether it has more leg for growth, whether it continues this up move. We'll have to wait and watch.